For my final project, I decided to choose stock analysis because in the future, some way or another, you're going to get involved in stocks. Even if you don't, you're going to hear about it from someone because that's how we base our economy. If we hear that the stock market crashed, then we know it's going to be a bad time until it rises again. This project is going to show you how to compare monthly stocks from one another. After all, if you're going to put your money into something, you should at least put some effort so you can make a profit and not go broke. Now let's talk about what we are doing to find the best monthly stock to invest in. First, I made a pros and cons list of each company to give you an idea of some strengths and weaknesses of the company. Secondly, to visualize the data, I put each into a histogram to give you an easy visual of what each monthly stock return looks like. Next, I listed things to keep in mind before finally comparing the stocks and drawing our conclusions about which stock is the best thing to invest in. So let's get started. First, I gathered data from 3 different shoe/clothing brands, Nike, Puma, and Under Armour. The reason why I chose these 3 is that they all sell similar things and are in the same market, and also vary in size. First, let's look at the pros and cons of Nike. Let's start with the pros. First, Nike is a very strong global brand. Nike is one of the most recognized brands in the world, which helps it sell products consistently. Second, Nike has had a very solid financial history. Nike's had a long track record of making profits and staying financially stable. An example of this is during many economic downturns, Nike has still managed to recover quickly. Third, Nike is very innovative and has marketing power. Nike invests heavily in new technology and strong advertising. An example of this is Nike ads with famous athletes helped boost sales and keep the brand relevant to younger customers. Fourth, Nike has had a very loyal customer base. Many customers buy Nike products repeatedly because they trust the quality and style. An example of this is someone who likes Nike's running shoes often sticks with the brand for years, which keeps sales steady. Now let's talk about the cons. First con is that Nike is in a highly competitive market. Nike faces strong competition from Adidas, Puma, and Under Armour, and new brands. An example, if Adidas releases a popular shoe line, Nike sales might drop. Second, Nike is sensitive to the global supply chain. Nike depends on factories overseas, which can be affected by political issues, shipping delays, or rising labor costs. An example of this is if a major factory closes or shipping costs rises, Nike could struggle to produce enough shoes. Third, Nike is dependent on customer spending. When the economy is weak, people buy fewer shoes and clothing. An example of this is during a recess, families might skip buying new sneakers, which hurts Nike's profit. Fourth and final con, Nike's reliance on trendy products. Nike's success depends heavily on staying trendy and releasing products people think are cool. An example of this is if a new shoe line isn't as popular or if fashion trends shift, Nike's sales can quickly drop. For the next part, I am going to use a histogram to help visualize Nike's monthly stock returns. The reason why I chose a histogram to represent my data is that it is very easy and simple to understand and helps visualize the data and see the monthly stock returns after using a histogram, where X represents the amount of growth percentage-wise that Nike's had and how many times it has happened. It is also accurate because it shows data being divided into bins. The Nike histogram was also slightly skewed right, meaning that Nike has had more positive gains than negative. The peak of the histogram was a section of negative 0.5% and positive 2.5%. This area shows stable returns. Next, let's talk about the pros and cons of Puma. Let's start with the pros. First, Puma is a growing global brand. Puma is one of the top sportswear brands worldwide, and its popularity has increased in the last decade. Example of this is Puma has become more common in major sports stores and is expanding into new markets like basketball and streetwear. Second, Puma offers competitive prices. Puma products often cost less than Nike or Adidas, which attracts budget-friendly shoppers. Example of this, a student might choose Puma because the sneakers cost $24 less than similar Nike shoes. Third, Puma is expanding its market in sports and fashion. Puma mixes sportswear and casual fashion, opening it to multiple markets. Example of this is people buy Puma not just for sports, but also for everyday outfits, giving the company more customers. Lastly, Puma has a strong celebrity and athlete partnerships. Puma works well with well-known athletes and celebrities, which helps boost sales and keep the brand relevant. Examples of this are collaborations with stars like Rihanna or top soccer players, increasing attention and demand for new product lines. Now for the cons. The first con of Puma is that it has a smaller market share than its competitors. Puma is strong, but Nike and Adidas dominate the industry, making it harder for Puma to grow quickly. Example of this is when Nike launches a big campaign, Puma sales can get overshadowed. Second, Puma has lower profit margins. Because Puma sells at more affordable prices, it makes less profit per item. Example of this is even if Puma sells a lot of shoes, it doesn't earn as much per pair as Nike does. The third con, Puma is reliant on the global supply chain and has manufacturing risks. Like many apparel companies, Puma relies on overseas factories which can be affected by economic or political issues. Example is a factory shutdown in Asia could delay shipments and hurt profits. Lastly, Puma has a limited presence in the U.S. market. Puma is popular globally, but has a smaller market presence in the United States compared to Nike and Adidas. Since the U.S. is one of the biggest sportswear markets, selling less there can limit Puma's overall growth and make it harder to compete. Next, to visualize the data, here's a histogram based on Puma's monthly stock analysis, where X represents the growth percentage rise of Puma, both positive and negative. The histogram's highest bin is between negative 7% and positive 1, which shows that Puma on average tends not to break even, but is also skew right, showing that Puma often has positive gains. Also, a big outlier is the negative 89% through negative 81%. This shows that Puma's had one major hit to their monthly stock market before. Lastly, let's talk about Under Armour. Let's start with the pros and cons for Under Armour. First, the pros. First, Under Armour has a strong athletic performance. Under Armour is known for high-performance athletic gear, especially compression clothing. Example of this is many athletes choose Under Armour for training because the materials are lightweight and durable. Second, Under Armour is growing its international presence. Although still smaller globally than Nike or Adidas, Under Armour is expanding into Europe and Asia. Example, more Under Armour stores opening overseas help increase brand recognitions and sales. Third, Under Armour has a strong digital fitness platform. Under Armour owns fitness apps and data platforms like MapMyRun that connect with customers. Example of this is people use these apps may buy more Under Armour products because the brand is part of their workouts. Lastly, Under Armour has a very strong focus on innovation. Under Armour has continued to develop new materials and performance technologies to improve athletic gear. Example of this is their hot gear and cold gear. Fabrics help athletes stay comfortable in extreme temperatures, keeping customers loyal. Now let's talk about the cons. First con is the intense competition. Under Armour competes against giants like Nike, Adidas, and Puma, making it harder to grow market shares. Example of this is when Nike launches a new basketball shoe, Under Armour often gets overshadowed. Second is the past financial struggles Under Armour has faced. Under Armour has had years with declining sales, lower profits, and leadership issues. The company once had to cut spending after several weak quarters, which damaged investors' confidence. Third is the smaller brand appeal. Under Armour is not as popular in fashion or lifestyle wear as Nike or Adidas. Example of this is many teens and younger buyers choose shoes mainly for style, and Under Armour sells fewer lifestyle products. Lastly, the reliance on North American sales. A large portion of Under Armour's revenue comes from the U.S., making it vulnerable to economic swings. If the U.S. shoppers reduce spending during a recession, Under Armour feels the impact more than brands with stronger global sales. Next, to visualize Under Armour's monthly stock returns is a histogram, with the histogram having X represent growth percentage for Under Armour broken down into different bins. As you can see, it is skewed left, meaning on average, it averages a negative monthly stock return. Its center is also in the bin of range from negative 7% to 0, meaning average it loses more than it gains, leaving Under Armour maybe not being the best choice to invest in based on this histogram. Things to keep in mind before making our final conclusion. First, the average return of the company. The centerpiece of the histogram, which tells you where most of the time each month of the stock would finish, and what bin it would fall into. Second is the histogram, if it is either skewed right or left. This tells you, on average, if the company either gains positively or negatively each month. Third is the potential to grow, which one of these companies has the most room to grow and be innovative, and which company has already made it to the top. Fourth, variation. Stock varies widely sometimes, so it's important to make sure to keep in mind how consistent a stock is. Now the final comparison, to pick the best stock. Let's first look at which way each graph was skewed, with Nike and Puma both being skewed right and averaging a positive monthly stock jump. But on the other hand, Under Armour is skewed left, meaning it is averaging a negative monthly stock jump. So this eliminates Under Armour. So now to decide between Nike and Puma. Let's look at both variations in the average/center bin of each. The variation within Nike is not very big, as there's not many big negative jumps, while there's also not many big positive jumps, meaning that Nike is very consistent. Puma is also very consistent too, but with a big outlier of 1 month having a negative 81% through negative 89% stock decrease, meaning there's a huge loss of profit. Overall, you can't tell which is better from these, so let's look at the central/average bins for each to make our final decision. With Puma being negative 7% through positive 1%, average, and Nike having a negative 0.5% and positive 2.8% average, which leads to our conclusion. After going through all the comparisons, I would personally favor Nike to invest in. While Under Armour and Puma do have a lot of room to grow in the future, Nike's current and consistent success is too much to overlook, leading me to choose Nike as the best option and personally what I would invest in.